The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We start out the show with the DAX index just like we usually do. And as you can see here, we've had a really strong day today. And with those bars going up like that, you don't want to just try to pick a top at point D. That's not the way we try to do things. We like to see multiple ratios come together and not try to catch a falling knife. That's never a very good thing to do. But there is one of these indices that we look at each day that is coming into a very, very critical level, and that is the index for the FTSE, which is the London market. If you remember, we made that giant ABCD pattern up there at 7,800. We came down, and you'll notice that we made a beautiful butterfly pattern, just about as perfect as you could get back here on the 3rd. And then that was a couple months ago, but if you actually a month ago, but if you'll see what we're doing now is we are very, very close to the 1.618 expansion of that move down from the 2nd through the 3rd. That's a 20-day move down, folks. And then the 78% retracement of that whole move comes in there just right above 7,600. So watch that very closely. The reason why that's important is these markets have a tendency, especially from the UK and from and Germany, that they have a lot of patterns that are very similar to what we see in the S&P and the NASDAQ and some of the others. Well, the NASDAQ's a little different because, that's just, that's 100 stocks, but there's actually 20 of those 100 stocks run the whole thing. As you can see what's happened with Apple this morning, up around 75 bucks a share after closing it around 69. Apple had actually a very, very bullish pattern, coming into this situation that we had with its earnings this morning. Let's just put it up here so you can take a quick look at it, because someone asked about it, and we also watch it occasionally. But you'll notice here that there's three things that I think are relatively important in this chart. The first thing is, if you'll notice that black line, how close it is to measuring the highs as far as each of them hitting the highs and then backing off. And of course, there's a huge drop into January and February. You'll notice that the butterfly pattern that it made during the time of late February to early March, during that 10-day time frame, that came right in at the 1.27 expansion of that. And it also matched up with that 3-drive pattern that occurred on the high of March the 5th. And then, of course, we made the ABCD pattern here on Friday. We had a really nice ABCD pattern. The 61% retracement was at 162. The low was 160.65, so that was not much below it. And now we're trading at around 75, which exceeds the 78% level of the big swing that we had, from March, down into May. So if this is a BCD structure, we could possibly see, Apple go up a great deal. But right now, we're gapping up, and whenever you have these huge gaps like this, there's a tendency that sometimes they will be filled, but maybe not the first day. That's the main thing we want to watch. Now, the other one that we've been talking about this week was Facebook, and Facebook came out with something interesting. This Facebook broke $70 a share. I wanted to talk just a little bit about this. Yeah, wheat is moving, Mike. Yeah, we're just getting started in these grains, boys and girls. We've got lots of stuff coming there. So we're going to try to have Rich Anderson on at the break, but he's just back in town, and he's having a little bit of a difficulty with the getting back. It has nothing to do with the snow. It's just the logistics of traveling and everything, and hopefully he'll be able to come on. I won't know for a little bit. They'll let me know just as soon as we can. If not, we'll have him on maybe later this week or early next week for sure. We're also going to have Stan Harley on, hopefully on Thursday or Friday of this week, to see if we can get some information from him. He always has some really great stuff too. But let's take a look at the Facebook. This was a perfect pattern, folks. 135. We came down. We went below the gap area down there at 170.80 area, and then of course Facebook came out and said they were going to start selling SEX, which is basically, the Match.com type stuff, and that pushed the stock up quite a bit. Now we're going to be really close to these old highs at 77 sometime today. I think it's trading at around 74 and change. And if we get above $79 a share, folks, that is going to break this this 135 pattern that we have. And you don't want to stand in front of it. I mean, the $64 question is, if you sell it at 75 and you're only risking $4 a share and you make $4 a share, now your risk on the stock is $8 a share, because the $4 that you made plus the $4 of your original risk. What I try to suggest to people is, if you're putting a multiple position on, take half of your position off, and when your risk is at zero. So that means that if you got down, below $4 a share, you would take off 1 unit, and so now you're basically in a risk-free trade, because if you get stopped out, you made 4, lost 4, so there's no harm done. But that's just one way of handling. That was one of the strategies that Amos Hofstadter used when he taught the folks at Commodity Corporation, to keep your risk as small as possible. You're going to get a chance to go into the pond and kiss a lot of frogs, and occasionally you're going to find a princess, but just try to find the one frog at a time and not to risk very much. And that's the whole key here. But above 79, and this is a failed pattern, and we will be following that one for sure, because if it fails, we know when these patterns fail, they have a tendency, to go a very long way. But as of now, it's nothing more than an emotional move, and so we'll see what's going to happen with it, and we'll watch it as we go through. Now, there's one other one that I wanted to mention that we talked about over the last day or two, and that is this hog market, folks. I don't recommend you trading hogs. The reason why I'm bringing this up, well, you can, because it's a good market to trade. It has open interest, and a lot of funds trade it, and a lot of people do. I don't, but here's the reason why is I like foreign exchange better. But if you notice here on the July hogs that we had the big break down there, we had the big ABCD pattern, stopped exactly at the 1.27 expansion of the whole move from September to January. Then we rallied up to a 70% retracement of the high from the original high. And look what's happened here over the last 10 days, folks. We pulled down to an exact 61% retracement with the little doji candles, and boy, that's really low risk at that level. You're only risking about a point here in the hog. So let's watch this just to see how it unfolds, because it's got a very nice pattern here. So we'll see how. We're going to take a little break here. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and we have a caller from the sports capital of the United States, Philadelphia, Pennsylvania. John, how are you doing?
I'm looking for Dr. J, and I can't find him.
He was the greatest, wasn't he? Oh my gosh, I got to see him play a few times, and it was always great. And I actually met him once, and he's a really nice fellow. And anyway, what do you want to talk about? You want to start out with the corn, I'll bet.
Yes. Question for you: These new crop corn and July new crop wheat. Am I crazy to think it's possible that wheat could rally 40% and corn 30%?
That's what Cy Monley's looking for. We had him on Monday, if you remember, and he's looking for much higher prices, somewhere above $5.50 in Christmas corn and another $1.50 higher possibly in wheat. If you look at this corn chart that you've been following, and well, we've been following it together for quite some time, the key to this was back on March when we made that 61% retracement, if you remember, right after that crop report. And then you see the crop report came in about 6 or 7 days later, and that started the whole thing. But this is demand-driven, John. I mean, they've taken these tariff things and said goodbye China because they have to come in and pay up for it because there's something's not right. And that's what Cy has been saying all along, is that there's all kinds of negative news, and yet the market just keeps going higher and higher. And those are the kind of markets you certainly don't want to fade. But it certainly looks like we could easily do that, without any trouble. Now, we're up into some pretty stiff resistance with ABCD patterns and stuff here at this 420 in the Christmas corn, but it certainly looks like it could have legs to go a whole lot higher. I mean, look at these higher bottoms for the last 4 or 5 months. That's not bearish.
Thank you very much on that, Larry. I am reminded of history and major moves in crop prices, grain prices in particular, typically occur when there's diminished crop size, weather problems, crop failures, that sort of thing. And I hearken back to two things, Larry. One was Minneapolis wheat in 2017, where Minneapolis wheat rallied from $5.50 to $8.50 in the span of 60 days. Mm-hmm. And I'm also reminded of the 50% rally in wheat prices back in 2010 between May and July, when there was a major crop failure in the Black Sea region, Russia and Ukraine, and that went to wheat crop. And Larry, I will just observe with you, of course, you pointed out nicely the rallies that we've seen in the corn and the wheat contracts thus far this year. And I'm focused upon how 2018 is presenting weather hiccups already this season in a couple of places in the world. One was Western Africa, in Ghana, according to Andy Hecht, with the cocoa crop in that rally. The drought that is emerging in the southern plains, that's already led to a rally in the Kansas City wheat contract. But, Larry, it's interesting. The second crop in Brazil, and that is the corn crop. They grow two crops down there. One is the bean crop that they plant in October and harvest in February, and then they follow that up directly, given their climate there, with a corn crop. And there is a regular monsoon pattern that keeps that Brazilian corn crop well watered. For reasons I don't understand weather-wise, that monsoon season has shut down and gone dry, which is threatening that corn crop in Brazil, which is in reproduction right now. And then over in Ukraine, Russia, the past 45 days have been bone dry, and the prospects for rain, at least I see from weather people who track that stuff, is the forecast the next 20 days looks particularly bone dry. So I'm just on high alert for either weather scares or true adverse weather that leads to crop failures. So hence my question.
Well, if you take a look at that December wheat chart that I posted here just a few minutes ago, that is one. You can see this wide-ranging bar that we had in wheat, and this is telling you that it doesn't have a whole lot of weakness. So I would be very, very careful shorting this. I mean, you can always go short because you can put a stop in, with the right scenario and everything. But a market this strong, you certainly want to wait for a fulfilled pattern before you would be able to do that. Now, we are up against some nice ABCDs, but with the strength of this, you've got to be prepared, because these markets have a tendency to really scream ahead. If a person wants to sell wheat in here, which is certainly possible, just make sure you use about a 7 or 8 cent stop, because if it's going to be really bullish, like you were just talking about, John, with some of these weather patterns that are out there, that'll go through those prices like it doesn't even exist. So just make sure that you use a stop if you're going to trade these markets, especially weather markets. And John, we're just barely getting started planting the corn and beans. So this is just the start of the growing season. And look what volatility we're having already. This tells us that we got a springtime folly coming ahead. There's going to be some wild opportunities here in some of these grains, in my opinion.
Thank you on all those comments, Larry. I wanted to ask a favor. Actually, not a favor. I put a request in advance, if you could. Having followed you and been taught by you and seen you assess markets and patterns now going all the way back to 2007, I am reminded of the utility when markets get crazy, when big moves occur, to pull out weekly and monthly charts to identify candidates for terminations of major rally patterns. Mm-hmm. And my request in advance is a request to have you pull out the longer-term monthly charts on the corn futures. And in the event corn starts to rally dramatically on adverse weather, if you could share with us spots to look for price levels to monitor for rally exhaustion. So that's my request in advance, and I appreciate that.
Okay, John, what I'll do is I'll do my best to get this up for you. Unfortunately, I don't have a whole... Oh, I know what I have to do. I've got to do it on the spot futures. In just a second, I have all kinds of data on this, but we'll get it up here in a second here. Oh, wow, this goes back... wow, hard to believe we had corn up around 765 not too long ago, didn't we? Wow. Just give me 1 second here to refresh this, and I'll show it right after the break. Okay, John?
Thanks so much for your help, Larry.
Okay, thank you very much. We'll be right back, folks. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back. Unfortunately, we're not going to be able to have Rich today, but we'll have him on again soon. The chart that I posted for Mr. Z was the long-term monthly chart going back the last several years in the corn market. And you can see here, corn topped at $7.65 a bushel when we had that drought a few years back. And then it goes all the way down to $3. And now it looks like the 382 retracement on this is another $1 a bushel higher. So that's the same number that John was talking about this morning, and also Simonley was talking about on Monday. So we want to keep an eye on that. Now, this is a monthly chart, so it's going to have a lot of moves. I would certainly recommend you looking at the daily, because it's much easier to trade the daily because of risk control, and we do watch that very, very closely. So keep in mind that we're going to get some really good opportunities here, but it's just getting started. That's the really fun part, because here we're only at the beginning of May, and this stuff doesn't really get moving until about the middle of July as far as topping action. So it's got a chance here to have some really strong legs that we have going on. Now, one of the charts that Rich Anderson was going to talk about this morning, I'm not going to take any of his thunder, but I want to just alert you to what's going to be happening when he comes on to visit us, and that is that there's something about these silver holdings that has been at record highs now for 7 years, and yet the price is absolutely flat. Folks, I see a long-term bullish pattern in silver and gold that looks absolutely phenomenal. Now, when we broke that 1310 level in the gold, that told us that we were most probably getting ready, to move to the downside. That's what it appeared to be, is what we were looking for. So what we were watching here is, so just get it up here, just show the chart from yesterday. It had a little bit of a rally, of course, from the low up to around 1311. But you'll notice here that we have some really nice patterns coming down here around the level of 1289 to 1290. That's going to be a 61% retracement. It's going to be a 1.618 expansion. It's going to be a 1.27 expansion. It's going to be matching the old highs from back in November of last year. So there's going to be a lot of support coming in here, but you don't want it to happen right away. And the reason for that is then you'd have these big red down moving bars that, that's the old falling knife syndrome, and you don't want to stand in front of that. So we're waiting for this to happen, but actually silver is acting, relatively strong compared to the gold market. It really is. I mean, it goes down and it immediately jumps back, 15 cents. That's a very strong market. Now, on the longer term picture in silver, which I will cover over the weekend in the newsletter, we've got some really, really big patterns down here. Just another 60, 70 cents lower. That's going to be really interesting to watch. The platinum has given up. We realize when that happens. Oh, we've got Rich on the line. Rich, are you there, my friend?
You bet. Back in Minnesota.
Hey, thanks, buddy. I really appreciate you. I know you're just getting in. I hope you have enough time to chat with us. But I was bringing you've been doing a lot of traveling this spring, haven't you?
Yes, I have. I have.
Well, that's good. Listen, let's talk about those silver stock things that you sent me by email. What's your feeling on the silver here? It looks like it keeps bouncing back really fast. Every time we get close to 1620, it rallies back another 20 cents. You see anything going on there?
Well, I think they, the traders have flushed and rinsed. They go down and they look for new lows, and when they can't sustain that new low, that's when the rally starts. And it kind of looks like they headed down yesterday and looked for all the stops, and finding none, they're going the other direction today. And that's where you get the good turns. And our buddy Rick thinks the 20-somethings is a possibility this year. And Curry at Goldman Sachs is talking about how commodities are the place to be. I mean, I think there's opportunity. It's all about money flow. Money flow causes these washouts. As an example, yesterday you saw the cattle flip back and forth in the first half hour, and then all of a sudden they're down 200 points. And it's all because in one plant they gave a raise to the night shift, and the morning shift came in and found out that the night shift got a raise and they didn't, so they all walked out. and that caused our board to sell off 200 points. I mean, it's just money flow. All these things are temporary. I think there's a setup here, and you know, I read a lot, but I'm a technician. You know, you gotta. You can be fundamentally right, but if your timing's wrong, you're going to lose money.
That's right.
Did back in the 70s in pork bellies. You know, they were going to $1. So it's timing, and that's why, you know, what you do is so important.
You know, we had Cy Monley on Monday, and he's been very bullish, you know, wheat and corn and beans. And we had John Cheney on this morning, and he's looking for, as Cy is, another $1 a bushel higher in corn. We've got a weather market going in wheat, I guess. It seems to me that there's trouble on the European front with wheat. Is that what's going on, Rich?
Well, we have a weather problem here in the United States on wheat. They grow wheat. It's almost like a weed. They grow it all over the world. But there's a problem in Russia, some problems in Australia, and in the southwest United States. I mean, some major drought problems. 2 weeks ago, we had 15 inches of snow in Minneapolis on the 13th and 14th of April because my daughter's birthday, and I was down in Florida. I was going to fly up, and then I didn't because of the snowstorm. And then driving up on Sunday, they're talking about fire warnings because it's so dry.
Oh, my gosh.
And I was going to take a picture and text it to you today of the last snowbanks in the parking lots are going to melt sometime this week.
Oh, dear, this is May.
Yet it's dry enough, you know, because of the hot air. 2 weeks ago, we had straight line winds in 6 states that were over 57 miles an hour, and it was 103 miles an hour in Colorado, and it blew the top off one of the hotels out there in I think, Denver. I mean, there's some strange stuff going on.
Yeah, it really is.
It gets too cold, it gets too hot, and that's going to make these grain markets go. There was an article in Bloomberg a month ago about corn could see $8.
I can believe that without too much trouble. Rich, on the cattle front and the hogs, we've got a really nice pattern here in hogs. It's sitting right at a 61% retracement. Do they have any chance to rally in here?
You know, I think they do. Again, as an example, Wilbur Ross flew to China last night. You know, I mean, all of our trade negotiators, Munchin, and all those guys.
Oh, okay, yeah.
Anyway, you know, if all of a sudden there's a headline in a day or two that says, oh, they're starting to agree on this or that, yeah, it can make a huge difference. And, you know, prices will get busy and go higher. The nearby, you know, the cash hogs, the May hogs are 67, 65, and the Junes are 74.05. You don't want to trade May. There's no liquidity. You really want to look at like the July at 76 cents, and I think they're going towards 80. I don't have any on, but you know they're going towards 80. I think.
Hey, Rich, thanks for joining us, buddy, and we'll have you on pretty soon. But good to have you back.
All right, I'll be more prepared next time. You have a great day.
You're doing great, buddy. Just glad you're okay. Thanks a lot. Rich Anderson, Anderson Capital Management. We'll be right back, folks. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. I'm going to bring up this chart of the E-mini S&P yesterday because we went down and hit that 78% level, really spot on. And while we were doing that, the Dow Jones actually took out that low by just a little bit, took it out by about 30 Dow points, and then, of course, it rallied 300 points straight up. Now, the S&P went up to the 61% retracement, so that pattern is still valid right now, so we're still looking for potential here of a market coming down here into early May. If you remember, yesterday we had Bill Meridian on from Cycles Research, and he said that he has some really strong downtrending cycles into the 11th of May, which were actually highlighted pretty nicely in one of his charts. So that's a really interesting statistic to see if it follows what this pattern is saying. That's down about another 10% from where we are right now. If we get that, that's the same pattern that we've seen in the Dow Jones over and over again. Now, I've had another question about the wheat market that we were talking about with John and Rich, and I just wanted to point out something to you folks about pattern recognition and how it can help you. This is a chart of Christmas wheat, Minneapolis wheat. Now, remember, this was not the wheat that was going on in July. This was December wheat, so it was a totally different contract. But you'll notice that when it made its top up there, you can see the top there in July, it made a double top. In other words, the second high was a penny higher than the first high, and look where it closed. That was a really good indication with that shooting star pattern that something really big had happened. And then on the bottom, you're making a really nice 78% retracement at a 1.618 expansion, and it has a huge rally of 50 cents a bushel. It pulls back 40 cents a bushel right to the 78% level, and the rest is history. It's on its way up again. So this is how technical stuff can help you, but you don't pick it up overnight, and believe me, it doesn't work all the time. That's the main thing to pay attention, that it certainly sometimes it works, sometimes it doesn't, but that's true in just about everything that we're doing. Now, one of the main things that we're watching here are, of course, gold and silver, and we believe that we've got a really big potential here in silver down the road a little bit. I wanted to bring this up to you because we got down to that 16.15 yesterday. We've snapped back quite a bit. Let me get this up here so you can see the daily chart on the silver, and you'll be able to see what's going on. Okay, so everybody wants to talk about wheat this morning. If you want to short the wheat, just wait till you get a narrow range bar and you don't have to risk very much. But if the bars are really wide and it's really running, don't stand in front of that. We've got some ABCD patterns here in the week, but if you're going to do it, you've got to watch it closely because, these people in these funds, they don't have any skin in the game. It's not their money, so they come in there and buy it, at any price. It doesn't make any difference. So watch it. Be very, very, very careful of that. But we're going to have some great volatility and some great moves coming. That's not a trade that see that the stuff is that's working is the thing that is what the technical pattern is telling you is what I'm trying to say here. It's hard to read a weather pattern. Remember, Cy Monley said it's hard to get a weather pattern that's better than 5 or 7 days in the future, and even that changes quite a bit. But technical patterns change, true. The one thing that technical patterns do is that if there's more buying, prices are going up, and if there's more selling, prices are going down. That's correct. Yeah. Terry is talking about the spread between Treasury and the German yields hitting an all-time high. We're in the midst of a major bear market in interest rates, folks. It's just a matter of when this next leg turns down. We have a lot of resistance up at the 144 level in the December Treasury bonds. Longer term, it looks terrible. And the one that looks the worst of the bonds is the one that Terry's talking about in here, and that is the Treasury notes. Just take a look at this weekly chart here on the Treasury notes. Now remember, bonds have rallied 3.5 points. The bonds, the Treasury notes have basically gone nowhere. I mean, this is telling you that rates want to go higher. They haven't gone higher yet, but they're ready to really accelerate, in my opinion. So pay close attention to that. Any move above that below that 119 level in these nearby notes is going to be a rather bearish phenomenon because that 127 is held so far, but going back below it again now after a small rally, and believe me, that's definitely a small rally. I would really be suspect about the long-term situation in interest rates going anywhere other than a lot higher. That 32-year bull market is over, and now we're going to get back into normal times of things that we're usually watching as we go through some of these things. Someone's asked a question about the Bitcoin. I'll bring this up here to show you. I believe we talked about this yesterday. It's still a little early to say what's happening with Bitcoin because we just made a 61% retracement from the March high, and we did have a higher bottom, you'll see, in April versus we did in February. That's a very positive thing. So we really want to watch the retracement down here around 8,000 to 7,500 in that Bitcoin, because if it gets there, that could be a very low risk. Now, I don't trade Bitcoin. I don't make any recommendations on it. I'm watching it only because John Jameson has proven to me from all my speaking with him, which is every day, that this is the coming thing. This is the internet on steroids, and the thing is that it's just going to take a while for it to come to fruition, but it's going to be very interesting to see that it's working. John basically says that this blockchain technology would allow them to record every word, every piece of paper that's ever been developed, and it'll be there for their use, whoever they are. So even though it is a very important thing, the thing that John is worried about the most is the weaponization of the Bitcoin. In other words, governments and countries holding you hostage from information that you have, because believe it or not, some of these politicians might have skeletons in their closets, and that's not usually a good sign. So we'll not worry about that until the future, but it is something that people are watching. I'll say this, that the chart in Bitcoin does not look like a chart of a bubble. It really doesn't. I mean, just because it dropped from 20,000 to 6,000 or 5,000 and change, that's not very much, because remember, it really started at, well, you can't count 6 cents a share, but around $100 a share, it was trading pretty actively. So there's something big out there, but whether it's going to happen or not in our lifetime, remains to be seen. But we certainly don't know that at all. That's the main thing that you want to keep in mind. Remember that the crude oil on this long-term weekly chart, and it's beginning to look like we're starting to move lower. We hit that 50% level up there at 69. We're now down below that substantially. So there's a possibility that this weekly ABCD in the crude oil could be getting ready to break down to the 66 stop. Very good, Mr. P. That's right. The 66 would be the next level. Actually, I think it's 65. Well, it's right on the money. 65.90 would be pretty much spot on. So we'll keep that one in mind for a potential short, because it looks like it's heading down that way. So 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, and as you can see, we're having more weakness in the euro market, which is also pulling down the gold. Just be patient on the gold, folks. I think we got some great buying opportunities coming here in the near future, down about another $20 or so in this gold market. Could happen today, tomorrow, who knows, but we'll wait and see. We'll sort of rely on our good friend Norm Winsky to give us a pretty good astro date for that, because he does a pretty good job. But right now it does look like it wants to move a little bit lower. but it's still a little early in the day here. But the euro just broke the old lows from yesterday. There is a bit of support down there at that 119.50 level, but it's relatively minor in my opinion. It looks like we're heading down to the 118 level in the euro. This is one of the things that we were most bearish on coming in this week because it had so many patterns coming in around that 120.60 level, and we went through that like it didn't even exist. So that tells you that it certainly wants to move a little bit lower. So we'll watch this one closely. Now the bonds are trading at 143.14. They still got a chance to make the 144 level, but notes are going nowhere. I mean, if you're going to sell anything, sell the notes because they don't even rally. I mean, they rally, but it's pretty much insignificant compared with what's going on to some of them. So keep an eye on some of those because they're going to be really interesting to watch here. We've got a big week coming up this next week, of course, the first week in May, which is always very important because we're starting to plant beans and a few other things, and a lot of things are going to be happening as far as volatility, so we want to be watching these things very closely. We got some nice positions working, and we'll see if they can continue, and other than that, we'll wait and see how some of these things unfold. But right now, it looks like we're going to be moving a little bit lower in stocks, and of course, the gold and the silver, and the currency's a little lower also, but they'll be turning here soon, so it's not going to be a one-way Corrigan. 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.